In this video, we're going to talk about what is a breakaway gap and why is it so powerful. Stay tuned. Hey traders, a very warm welcome to you. Okay, so a breakaway gap is a seriously powerful thing that can occur in the markets that we need to pay attention to. So in this short video, I'm going to talk about what it is, how it sets up, and most importantly, how we can potentially use it to make money as traders. Okay, so we have this scenario. Pretty much, I assume most people are familiar with a gap. The concept of a gap very quickly is that we're going, even in the case of an upward gap or a bullish gap, it means that the close is at a level, the open is higher than the close. Sometimes we'll get a gap above the high, which is even more bullish, but it just means that the open is higher than the close. Same if we're on a bearish gap, it just means the open is lower than the close. There's a gap in price between the closing price and the open price. Right, let's put it into context of what is a breakaway gap. So a breakaway gap is pretty much as it says, really. We have a cluster of price here. Now, you're going to assume these, I didn't want to draw candles for all these, but just assume these are bars. So you've got highs and lows, opens and closes. I haven't quite done the opens and closes on, but you get the idea. We've got a cluster of price down here. It doesn't always happen like this way, but this is generally, I would guess, the most common way that we get a breakaway gap. So we've got a cluster of price here. Then all of a sudden, we get a gap up in price that causes the start of a new trend. So in other words, a significant gap from here to here. There's our gap level, okay? And then it causes a good rally and a good kind of move up. So what causes this? It could be anything, but it's mostly gonna be some kind of catalyst like news, earnings, some kind of external influence that reprices this market. So if it's a stock, let's say we had earnings, you might get a gap up, and that just doesn't necessarily mean it's a breakaway yet. To get the breakaway, we have to then see the follow through of momentum. So how can we trade it? In fact, before we talk about how to trade it, let's just have a quick look on the downside. A bearish breakaway gap or breakdown gap, however you want to frame it. Same kind of thing, just in reverse. Cluster of price consolidation, gap lower. Here's our gap position here. And it's the difference between there. And we've got a breakaway because now we've got some bearish momentum. But I just want to stick on this one for now. Obviously, if we're trading for the bearish side, we're just flipping this over. So how can we trade this? Some trade ideas to get on board this breakaway gap. These are actually more common than you think, especially with earnings in stocks, some kind of news incident that happens overnight or even over the weekend. If you're trading Forex, and then we have that gap from the Friday to the Sunday, we can have this scenario. Especially if there's a lot of geopolitical news coming out over the weekend, this is a very feasible occurrence. So how do we trade it? So you've got a couple of options here. Extra aggressive, you can take a trade on the gap. So you can kind of say, okay, we've gapped up. I'm going to buy it now on this close, and I'm going to have a stop below the gap. Now, a little word of caution for that. Obviously, that's giving you the most chance of the best possible move. However, just because it's gap doesn't necessarily mean it's going to break away and just rip off to the upside. So you could do that as kind of a first batch of your order, perhaps scale into the long position there, or you wait for a couple of days later. Now, this is where you can adjust it to your trading plan to suit your own risk tolerance. So you can either say to yourself, okay, well, actually, if you're being very picky with your trades, you can say, you know what, we've had the breakaway gap. I'm going to wait for my first pullback trade. So you're going to bolt in another trading strategy within the overall sphere of the trading gap. So you might then say, in fact, let's use a different color pen. Let's go with our orange here. You might then say, okay, I'm going to trade my first pullback because I know it's aggressive. I've seen a gap. I've seen a reprice. I've seen now 4 or 5 days move. I'm going to wait for a pullback, a little bit of a supply demand, a balance kind of shift back into equilibrium. And I'm going to trade a break. Or I'm going to buy on a pullback, or I'm going to wait for a moving average. Something like that. So you don't necessarily trade the break of the gap. You then put it into the context and say, hey, it's another tick in the box, in the bullish box, so I'll trade that later. If you did want to trade the gap, then you either wait for the gap, and then if it's me, I would want to see this being a nice, solid green candle and closing at highs, a nice trending day, got the gap, And then potentially, you feel comfortable to say, okay, well, maybe I'm going to buy it on the close and I'm going to put a stop at maybe 50% of that candle or right underneath it. Or, you might say, okay, well, on day 2, I'm going to trade a breakout of day 1's high and then put a stop in wherever I want to put it. So different ways of trading it. The whole point of this breakaway gap, though, is that it's a big change in sentiment, enough to shift us in a gap scenario, and importantly to kind of comply with the breakaway gap rules, that it actually then continues the momentum. So if you see that, it's probably worth looking at. It's probably worth also devising a trading plan or trading strategy around this if you see it, even if it's just to avoid going short into a breakaway gap until you perhaps see some weakness and maybe come back and do some work down here after you've done that. Of course, that's perfectly feasible as well. We have that scenario, a lot of people sucked in, undoes it, and then you've got a short proposition later. There's a couple of layers of trades that can come from this, but the important thing is this is kind of the foundation of potentially some good trades. All right, guys, thumbs up if you like this kind of stuff. Go and subscribe if you haven't yet already for more videos from myself and others on this channel. Take care, good trading. Keep that risk managed. I shall see you in the next one. Goodbye.